Roanoke Rapids reminds me of the town that I grew up in Central West Virginia, where everybody knows one another, everybody shops with one another. And as I was telling one of our fine council ladies here, in my town, my dad was the mayor and my mother was a teacher. So if I got into trouble, everybody knew it. So I had to kind of keep my nose clean, which I rarely did. As I stand in front of you here this afternoon, I am reminded of probably the three most misunderstood statements here in America. Number one, the check's in the mail. Number two, I'll love you as much tomorrow as I love you tonight. And number three, I'm from the federal government and I'm here to help. Well, hopefully, when I get done this afternoon, you'll realize that, yes, I am here to help. Would you believe if I told you, now this is federal government standards, that 99.7% of all businesses in the United States are considered small? That means that little 0.3% that's sitting out there, your Fortune 500 companies, your Microsoft, General Motors, people like that, they're not the movers and the shakers. They're not the builders of this economy. It's you. And without small business, big business cannot survive because you're the feeder system. Everything goes up and down the feeder system. And remember this, at one time they were small too, weren't they? And it was because of your help and assistance and aid that they become what they are. And hopefully maybe some of you can be the same. We have some success stories that have become that. And I'll mention this a little bit here. Now, as Alan was talking about starting a business and owning a business, and I know talking with the young folks beside me here at the table that had started their business a couple of years ago, it is hard to start a business, isn't it, Alan? And that's in good times. I mean, if we have a bad economic downturn like we've kind of lived through here, it's even tougher. Now, we did some studies on this, and believe it or not, the number one reason for small business failures in the first 3 years wasn't lack of capital. Lack of knowledge. Didn't know what they were doing. Okay? Based upon that, we decided at SBA many, many years ago, long before that study came out, that how can we get aid and assistance to our small business entrepreneurs or would-be entrepreneurs? We've got some excellent services, some that you may know of because they come here all the time. One of them, SCORE, you probably heard of, Service Corps Retired Executives. We have a chapter in Rocky Mount that comes up here and counsels. They are basically come from what I call the College of Hard Knocks. They are like you or not. I mean, they've been there, seen it, and done it. They've owned businesses, and now you have the opportunity of learning from them at no cost. All right? We have another group called the Small Business Technical Development Centers. Now these we help fund. We match every dollar for state dollar into a college system. In this case, it's a University of North Carolina college system, in which they will hire consultants to work and counsel with you. Again, at no cost to you. Probably your closest SBTDC office might be Greenville, I would assume. Okay, but you can go there and also talk with folks there. We also have 2 women's business centers, which don't let the women's business center name scare you a little bit, because yes, they will counsel guys as well. But the key they do, we fund 2 of them, one in Fayetteville, which might be your closest, and one in Durham. Now what they do is that they help what we call the underserved in the federal government. And the underserved is any business that is majority owned by either a minority, a woman, or a veteran. These are the folks that we try to get the assistance to, whether it's business plan, whether it's marketing ideas, pricing your product, or even finding financing or contracts in the federal government. We go this direction. We also have what we call, and we don't fund these folks, but I consider them part of the resource team here in North Carolina because they're so good. Excuse me. And that is our small business centers through our local community college system. We have one right here at Halifax Community College. These are also folks that can sit down with you and work with you and counsel for your needs. So you have so many opportunities to tap into these sources and let's say overcome, let's say, that lack of ideas or management, let's say, to go into. Now, what SBA does, a lot of people think that we are a lender. We are not a lender. We are I like to put it, offer an insurance policy to a lending institution, okay? And what we do is that we guarantee against loss, meaning that any loan that a lender or credit union of some sort were to make, we would guarantee 85% against loss, up to $150,000, and anything beyond that, up to $5 million, gets a 75% guarantee. And that's pretty much the way it is with most of our loans, with the exception of one, which I'll go into in just a minute, in which banks do like that one too because of other ideas with it. Now, what makes SBA very, let's say, appropriate and something that a lending institution might want to look into is, number one, we'll do startups. And we know that, and I know we have a lot of banks and lending institutions here today, and we know that the lenders will tell you they lend on risk. And naturally, if you're a new business, well, you know, there's no tax returns to work off of, so we have to work off of projections and their guesstimates. So what we do is that we mitigate that risk, naturally, by bringing that risk down to those percentage marks that I was telling you about. We also allow that lender to go beyond what we would consider their own, say, internal maturity levels. Most banks are short-term lenders. They know with SBA, they can go longer terms. As an example, 7, possibly 10 years on working capital equipment, 25 years on real estate. So that's a whole different ballgame now when you're working with that guarantee. Excuse me. We've got an excellent program which we call 504. So for any of you businesses in here today that are thinking about maybe moving out of your leased facilities, or maybe you're starting your business and wanting to buy a building or construct a building, we've got an excellent program in which literally you can almost come in with little as 10% down on your part. And the other 90% is funded this way. The SBA comes in with 40% money. Now, this isn't bank money. This is our own. And how that money is derived is that every Tuesday, first Tuesday of every month on Wall Street, the federal government floats bond debentures. And there's a fund that comes off of that, a percentage rate with which when we get the funding for that particular loan, that you, the customer, will pay. And it's a fixed interest rate, not floating. And the last sale that we had priced out, the 40% portion came out at a little above 4% for 20 years, fixed. Not bad. And the other 50% now will come from a lending institution. Now, there's no guarantee on that. But the way that the banks like it is because they get a first trust deed on the property. So as you can see, with only 50% money in and a first trust deed, they're